Good morning, Armor Insiders. Welcome to the morning meeting of our virtual hedge fund and our trading desk. We're going to go over, as always, big picture stock market. We're going to talk about the number one index to keep your eye on to see if this mechanical bull market is about to take the next leg higher. And I'm going to share with you the number one chart of the day. We started buying it yesterday. I'm going to add to it today using our day trading tools. And then I'm going to share with you, really the number one concern out there that we're reading a lot about, something that we should have our eye on, but a little bit of a different take on it than what most doomsday people were talking about on Twitter and anywhere else in the financial twit space. Twitter, X, whatever the hell you want to call it. All right, so let's dive in. Don't forget, you are the risk manager of your own assets. Whatever I tell you, whatever you read somewhere else, at the end of the day, you got to take responsibility for your actions. You got to be the smart money on your own. Okay. So figure out your strategy, execute that strategy. Here we go. Number one chart to keep your eye on when it comes to the mechanical bull market. And that has to be the equally weighted S&P. What you're looking at is a high, tight wedge, high, tight pennant, whatever you want to call it, of 9 weeks in the making. Very little give back in the market. That's the equally weighted S&P. Here's the S&P itself, which is in an incredible uptrend at like a 45-degree angle and consolidating very tight at the top of that trend after a big Friday last week. So not a lot of give back in the market. And here's the equally weighted. So we're starting to see that come on. Now, I know there's been a lot of talk about issues with breadth in this market, and people love to complain about that, and it really doesn't really mean much. Okay, the breadth in the market only means something when the market breaks down, and then they like to point to it. Oh, look at that. To me, the breadth in the market, what does that really mean? You're getting leadership leading, and we're kind of waiting for the rest of the market to join the fray. That's a perfect mechanical bull market. The next stage, the next leg up, alpha will shift from big cap names like, let's be honest, NVIDIA, okay? So you have NVIDIA trading, if you look at the weekly chart, in absolute stratosphere into the next earnings announcement, right? So, I mean, can it keep on going? I guess, okay? But that alpha is probably gone on NVIDIA. Now, we talked about buying leaps right in here. Obviously, those leaps are up huge, okay? So the next leg of the mechanical bull market is when the equally weighted S&P breaks out. And that's when breadth will get better. There'll be more names coming out, right? And all the Chicken Littles will get excited about that. And I'll be here telling you, as that's happening, that that's closer to the end of the mechanical bull market than the beginning, okay? That's the funny and insidious thing about the market when all stocks start to go berserk. It can last for a number of weeks, maybe in a month or two. So it'll be great. I'm not saying we won't make a lot of money there, but it will also be a sign that we're getting towards the end of that bull run. That's just the way mechanical bull market. So I still believe that Q1 of this year could be the best quarter of the year. So we've got to maximize success during that period, because Q1 might be all of the gains and the rest of the year might be grinding it out in the corners type of year. Okay. So that's why we keep stepping on the gas here. We're using double and triple ETFs of market indexes, and we're looking to seed our portfolio now with individual names that are innovative growth that we think will rip higher when that chart breaks out. Okay. So let's skip over now to the number one group that we're buying here, and let's dive into XBI. All right. So number one group ETF we're buying, XBI, and we're doing it through LABU, which is triple XBI. Okay. So I like to do the triples. This way I don't have to figure out which individual biotech stock is going to skyrocket. I don't have any risk of an individual stock blow up, but I'm going to get the entire move of the group. I want you to look at this consolidation. Now, first of all, let's walk through the progression, okay? We got long LABU right down here in this green box, and we had a great rip, made a lot of money on that. Booked our profit in the yellow box. So what we bought was the bottom of the channel up to the top of the channel. Booked our profit, wanted to see what the correction was going to be like. This looks like the correction is going to hold 25-day moving average, which is this dark red line in here, okay? It was possible it was going to come down to the thick black line, which is the 50-day. but it looks like it's holding at a higher level. Armor Algo gives a risk on entry point yesterday at the close. We have half our position on. We're looking to buy the rest using our day trading tools to get on a bigger position today. Okay. But it hasn't even started yet. This is a follow-on buy trigger. So here to here was stage one, tight consolidation at a higher level than I thought it would be. I thought it would get back to the 50. It didn't. Okay. And now what we're looking for is a breakout of a huge base. Okay. So biotechs are looking to break out of a base that goes back to 2022. We're talking a couple of years here, guys. It hasn't even started yet. If XBI can get above 90, there should be a lot of upside in the biotech index. And that would follow a mechanical bull market into stage two, stage three. Stage one up, stage two down, stage three we're going into now. That should get crazy to the upside. We should see innovative growth. We should see biotech. Things that are more aggressive should start popping off. Okay. And so the leadership keeps going up, but there could be some real alpha in the other groups that have been waiting for this. Equally weighted. Look at the equally weighted S&P. That breaks out. Biotechs break out. We're going into that next phase. It can get pretty crazy. And so the idea is to get on things as quick as we can, use our stops correctly, book some profits at targets, and then trade around the core and let it go. All right. Can't stay on the desk with us all day. I get it. Nothing wrong with that. If you need to work with us one-on-one, feel free to give me a call, direct message, whatever. And I'm happy to spend some time with you. Everybody have a great trading session.